Hello, everyone. This is Victor Riasco, CMT. I hope you're having a great end of the year. And this is a market update for the week of December 18th. So, well, if you've been watching the market as of late, we've seen a really impressive rally um, from the October lows. I don't think too many people thought this what was going to occur. Um, these type of rallies usually happen after a very big crash or down downtrend like last year or here, or we will have to go back to after the COVID crash. We get this super strong like non-stop rallies. So having it here after a pretty significant correction, but with most of the market in a bullish trend already, it's pretty impressive, and it's broken quite a few records, and well, and the intensity has been non-stop. So if you've been bearish on the market, you probably have gotten a lot of pain, and if you were waiting for a pullback, we got maybe this few days here, um, last week, and that's it. So this intensity has obviously is good for longer term breadth studies. Let's go back to our summary here. Let's start with the long term, um, the most long term study, the percentage of stocks in a primary uptrend. So we've had a super impressive recovery from the October lows, and now we're at 72%, which is a very healthy number. This is around the number where we reached in July, and the near the February highs also. So that's a healthy number. Uh, it- of course, we're long overdue for a pullback, but readings this high usually have very bullish implications for the next 6 or 12 months. So my forecast for next year is that we're gonna remain in a bullish environment, and basically we should look to buy pullbacks in the stock market when they occur. Um, so that's a positive. Another positive in more midterm is the intermediate trend with the accumulation and the amount of 50-week highs versus lows. Um, Here we can see that well, we reach extremely bullish readings in accumulation, and also if we go back to 52-week highs and lows, which is a very popular measure of breadth. We're gonna see if the program helps me out there. We see here the trend started to turn positive here, and now we see the average, the 15-day average of new highs versus new lows is clearly uptrending, and we got a big spike of new highs here after the Fed meeting. So, and actually, we hadn't seen so many highs since this uptrend started, and and that's also a positive. We see, for example, when we had this super strong bull market from 2020 to 2021, early 2022, we saw that 52-week highs dominated 52-week lows for a long time, and it was pretty evident. So we're getting back into that configuration. Um, Also, another positive for the next year is here in this buying pressure um, study. We see that buying pressure turned positive back here in early November, but we see these huge spikes of buying. This is the average, but these spikes are the buying thrust that we have seen. recently, and these buying thrust are positive. They have positive implications going forward for the next 6 or 12 months. So clearly bullish long-term prospects in the market just by seeing the press studies. Um, what else? Well, the trend of the VIX, it's negative, which is a positive. It's at really low levels, which many are saying, it's cause for a concern, but it's not really a cause for a concern. The VIX can remain at really low levels for quite some time, and the market, just can keep on moving higher. Um, what we what we could see, of course, if the VIX starts spiking a bit, and the trend, the short-term trend at least turns higher, then it's very likely we're gonna see a more important pullback, and than just the sideways action, or just mini one day drop and plowing higher. So if this starts to trend, this short-term trend starts to turn bullish, then it will be a more a good tell that the market could face a bigger drop than it has seen the last 2 months or so. That's been extremely bullish. Um, now, of course, this type of these rallies are with non-stop action higher made a has made us trigger some overbought signals. And now actually we are in an overbought signal in our short-term indicator and intermediate term. So here's our short-term indicator. It got above 90. I think it was, yeah, it was 90. Yeah, it was on Thursday, and it barely dropped. It's basically at the same level above 90. That's when an overbought signal triggers, and the intermediate trend indicator actually got overbought here. Um, didn't cause, I mean, here it didn't cause much of an effect. Just stop, a small pause in the rally, and now we are again really at really extreme levels. To be honest, I have to go back to basically 2020 when we got higher than what we are right now in this indicator. And back then, let's go back a little bit here. Yeah, back in 2020. mm, yeah, so back in 2020 over here, we got a 92 reading, and that was the peak of this really strong move higher that had started in the bottom. Um, and then we got a meaningful pullback and some consolidation for a little while, and then the market plowed higher. But what's even, here when we got that rally, it was after a major crash, and even though we got a super big move in a small time, you still had, here and there a couple of down days that were pretty relevant. Now that's been different or frustrating if you haven't been able to be long is that the rally has been non-stop with basically no pullbacks. So sometimes the markets are like this. Uh, they you can have all the models you want, and they're useful. Of course, you have to have models and signals and the probabilities to to trade the market, but the market is it's like a wild animal. It's you can't really tame it. You have to be prepared for basically anything. It can turn and do things you don't expect. So uh, it's the nature of the beast, and sometimes um, most of the time, if you have good models, good signals, they're gonna be helpful. But you always have to be aware that you have to manage risk, because and sometimes really weird things are gonna happen to the downside or to the upside. And yeah, most of the time your models are gonna be, if you have good studies and you've been doing this for a while, your models will help you, gauge the changes in the market and help you time entries and exits. But sometimes they won't. So you can't get too overly confident and think you've mastered everything. There's always risk here, and there's always the chance that your models or the tools that you use are not going to become useful for some time, and you have to always consider that in your trades, and take the measures to manage risk if if you're wrong. um give me a So in this also, just seeing how strong the rally has been. Here is a chart that I thought it was interesting, that uh, more than almost near 50% of the S&P 100 stocks are with an RSI greater than 70, which is the highest level in 32 years. So does this mean that the market's gonna sell off? No, because overbought conditions can persist a lot longer than one might think. Sometimes you can nail the top, but other times no. But this shows you, how the more than the indicator itself is just to show you that the market has these fat tails in their return distributions, these black swans, and weird things can happen. So it's not like a perfect normal distribution that odds are gonna play out super organized and super predictable all the time. Sometimes you're gonna get weird events like now, and you have to be aware of that. Um, Here it's also one chart that I thought it was interesting. Is from bar chart that small caps rallied nearly 24% from the October 27th low to the high in December 14th. And that's the fastest swing from a 12-month low to a 12-month high in history. So again, that's this is the nature of the beast, and weird things can happen, and you have to be prepared, and you have to manage risk if things are not going the way you expected. And it's not going to happen all the time. Most of the time, the market does not behave like this. But don't be too frustrated if things haven't gone your way as of late, because it's been um, pretty extreme events. And and to end the video, just wanted to mention seasonality. uh, we're actually right over here. This should be like the weakest days in December, and it should turn bullish seasonality again by Friday, for the Christmas rally effect that extends to the beginning of January. We're here. So if we get a pullback these days or these coming days, um, from it should probably be a good time to buy. Hopefully we get a nice pullback. uh, we'll see. But overall, as I've said, the internals in the market are bullish, and they suggest uh, more gains longer term. That's your big picture. If you're a shorter term trader, with the overbought conditions, short term and mid term, plus the weak seasonality of the coming days, there's a good chance that we could get a decent pullback that hasn't happened. And I've been expecting one. It hasn't really happened, and I've missed some opportunities. But that's the nature of the beast. You're not gonna make all the perfect calls all the time. So if you're a shorter term trader chasing here, I wouldn't do it. But if you're in here for a longer term time frame, um, things favors the bulls, and we should have a bullish 2024. So that's it. Hope you enjoyed the update, and you can find me on Twitter. That's where I post the most. And hope you have a great end of the year, and with you for you and your family, and have a everything goes well for 2024. Thanks.